We have Ashutosh Mishra. He's the head of research at Institutional Equity, Stockbroking, who joins us on the show. Good morning, Ashutosh, and thanks for taking the time out. We start off with Kotak Mahindra Bank first. Your view of the numbers, your view of the, well, what we can expect going ahead for the bank as well.
So, Kotak Mahindra number was quite positive surprise for the market. People were not expecting a similar type of growth in a condition in which the bank is operating. Bank is constrained because of the RBI restrictions on the digital, expansion part of the bank. Despite that, bank has delivered a very good set of numbers. So, if we look from that point, the performance was very good, and that's why I clearly see that banks doing relatively well compared to many of its peers in coming days. Even when we look at positive trigger point of view, the management interactions really suggested that they are at a fairly advanced level of resolving the issue of IT infrastructure part of it, and most probably in the next few months we may get the positive new announcement from that front too. So keeping all this together and type of underperformance which we have seen in the past and positive trigger which we may see going forward from here, I think Kotak is very well suited among the large private sector bank at this point of time.
Okay, so Kotak Mahindra is doing well. Just, I'm going to get a quick word from you on RBL, Ashutosh. Is this more reflective of now a little bit of nervousness on the microfinance portfolio across the board?
I don't think so. There was a problem in microfinance portfolio, but if you look, MFIN data and all other things have started improving from December onward. A few of the state like different bank and NBFC management, which they are making comment is that things have improved substantially from December month, and it will take one more quarter to start getting reflected into the numbers part of it. So probably from the first few of FY26 we will start seeing the banks which have relatively higher proportion of microfinance exposure may stability in their performance. Till that time, we will continue to see that their asset quality and credit cost will remain at elevated level. And in that, yes, RBL results clearly reflect that, and fewer more smaller size banks which are relatively higher dependence on the microfinance portfolio may witness similar type of the result in coming.
Ashutosh, Vishwanath joining in. So is your assessment that Q1 is probably where we start to see a turnaround for RBL Bank, or maybe before that, maybe by the March quarter results might throw some kind of management guidance on improved numbers?
So management guidance may improve from the March quarter, but October and November was not so good for microfinance in terms of recovery. So that will get reflected into the fourth quarter results. So expect only substantial improvement coming in from the first quarter, not before that. Fourth quarter, probably they will use this to increase the further provisioning level. And that's why I expect credit cost to remain elevated for the all lenders which have relatively higher dependency on microfinance portfolio.
Just one last question, and this is on Kotak. I wanted to get your view. So they've seen stronger current account growth during the quarter. How are you seeing overall deposit growth for the bank? 15%, 16% number that they showed, sustainable in your outlook?
I think it's sustainable. Like non-deposit fund, a lot of things has changed. Liquidity management and other part also we expect is changing. RBI policy stance may ease some of the concern which we have on a deposit front. Even credit growth has substantially softened up. So keeping that, I don't think so. Banking system is going to face any major issue on fulfilling the commitment of credit growth because of constraint on deposit front. At least in FY26, I don't see that situation coming in.
Just one quick last question, Ashutosh, and we've spoken about Kotak and RBL. Just what are you expecting from an HDFC bank?
So HDFC, again, they have clearly indicated that this year FY25 will be the consolidation year for them. So there also we will see the credit growth remain very soft for them, and because of that we are not going to see a very very favorable P&L outcome. But on asset quality, I don't expect any negative outcome from that.
Okay, that'll be important. If an HDFC bank delivers, then the whole mood, I think, will change a bit as far as private banks are concerned, and of course ICICI Bank as well. Thank you so much for that, Ashutosh. Great speaking with you.